Ethereum has been one of the top performers in all of crypto in the last few weeks. It has been doing better than Bitcoin, better than Solana, better than most other altcoins. The question is, how much longer can this rally last? Does it make sense to take profit now? Is it too late to buy now? Who's fueling this rally? In this video, we're going to look at the data most people are not considering. Now here's the analysis a lot of people make that I don't think brings that much value. It's just looking at the US dollar chart of Ethereum and coming up with random price targets, right? Are we going to hit $5,000 or $6,000 or $10,000? An analysis like this doesn't really help because crypto is highly correlated, right? When Ethereum is going up, then Bitcoin is going up as well. When Ethereum crashes, Bitcoin crashes. There's so much correlation that those random lines, for example, this support over here, doesn't really mean much. Instead, it's much better to look at Ethereum relative to the rest of crypto, because this is how crypto fundamentally works in my opinion. We've got our capital pool, and then over time the capital moves to different asset classes. There's capital rotation happening. At one point everybody is excited about Bitcoin, then it's Ethereum, then it's Solana, then it's smaller altcoins. There's always this rotation happening. So we have to look at what's the relative performance. And a very common way to look at the relative performance of an asset within all of crypto is a dominance chart. So we're looking at the percent of the market cap of a particular asset within all of crypto. Currently, almost 12% of all of crypto is currently the market cap of Ethereum. And we saw a bounce in April of this year at the exact same level where we bounced in September of last year. Isn't that fascinating? We actually anticipated that we're going to see a rally in Ethereum at that level when the dominance was only at 7%. And so just based on this chart, right, there's probably more room to grow. Ethereum might outperform the rest of crypto by more than 20%, potentially even 80%. But what is currently driving this rally? Why are we even bouncing? Who's buying that much Ethereum? The answer is Wall Street. Have a look at this. This is the Ethereum ETF. And in the last days, we saw massive inflows. In general, over the last months, we didn't see many days where Wall Street was actually a net seller. But especially in the last 2 to 3 weeks, the purchasing has accelerated incredibly quickly. If we annualize the last 14 days, and we expect the same kind of demand going forward, we'd see 18% of the entire Ethereum supply getting bought up by Wall Street in the span of a single year. Those numbers here are much more bullish than what we currently see for Bitcoin. Compare the numbers here with what we've got for Bitcoin. For Bitcoin, we've got a monthly annualized supply absorption of only 4.3%. We do see constant inflows. We do see that most days Wall Street is buying Bitcoin, not selling Bitcoin. So this is obviously good. But for Ethereum, it's a whole different level. And because of that, we see now how the total value locked, so the capital that's on a chain, is growing faster for Ethereum compared to the other major chains. In the last month, we saw the total value locked of Ethereum increase by 34%. And it was only 16% for Solana, 16% for Binance Smart Chain. And there was not a single chain that went up by more than 30% in the last month. Now a chart like this, right? The Ethereum dominance chart is somewhat exotic. This chart here is a bit more common. It's Ethereum relative to Bitcoin. And again, this is recently going up because Wall Street is buying like crazy. But why is it buying that massively? Probably because Ethereum is seen as the major player of decentralized finance, and it's probably also going to be the major chain that's going to help with the real-world asset adoption. Currently, we've got mainly stablecoins and also some gold on the chain. But over time, we might even see some stocks getting listed on Ethereum. So there might be stock trading directly happening on chain. And that, of course, will boost adoption quite a bit. The tokenomics of Ethereum are currently better than of Bitcoin. So the Ethereum supply is growing by 0.7% per year, and Bitcoin supply is currently growing by 0.8% per year. It still takes more than 2 years until Bitcoin's inflation rate gets cut in half. Let's see how Ethereum adjusts to that. Besides the newly minted supply, we also have the question of staking, or of supply that simply gets locked up or that potentially even gets completely forgotten. Now for Ethereum we've got staking, for Bitcoin we don't have that, but Bitcoin has been around for such a long time that a lot of the BTC simply gets lost. And so to a degree we can compare those two. So here's the staked Ethereum over time. It goes up, and so that means that the liquid Ethereum, the Ethereum that's available in circulation, tends to go down, which supports the price. But we've got something similar to a degree for Bitcoin. This is the hodl waves. What we see over here is the Bitcoin that has not moved for the last 5 years. And this tends to go up long term. And if you take the last 5 years or so, this may be increased by around 8 percentage points or so. So 1.8% of the supply per annum gets either lost or is at least with investors that tend to really not move their Bitcoin. There was actually a lot of misinformation around this recent Ethereum rally. Ethereum went up because of Wall Street. It led the current rally. And yes, the altcoins went up as well, but the altcoins were really not what was driving the rally. Many people said that the altcoins are currently booming, that retail is back, and that maybe the altcoins could crash. I am not bullish on altcoins, but I do not think that they really drove the rally. Because on the face of it, it might look like that, right? In the last week, there are many altcoins that appreciated quite nicely. But here is why they appreciated. Many altcoin US dollar prices are directly linked to Ethereum. Have a look at this light gray ticker here, right? We've got the altcoin ticker and then / wrapped Ethereum. So the price of the altcoin is determined by its ratio to wrapped Ethereum in a liquidity pool. If Ethereum goes up by 10% and there's not a single transaction happening, say on the SPX 6900 token, then automatically SPX 6900 also goes up by 10%. We need 0 transactions here, simply because wrapped Ethereum is going up by 10% in US dollars. SPX 6900 automatically also goes up by 10%. And so there's a direct coupling, thus a very strong correlation with the US dollar prices. So those altcoins going up is simply just an expression of Ethereum going up and pushing the altcoins with it. We've got this effect on the Ethereum chain, but we've also got the same effect on the layer 2s, right? For example, the base chain or the Arbitrum chain. And so really a useful metric is to look at how is Ethereum doing relative to the altcoins, because we want to know how is capital flowing from Ethereum to the alts and from alts to Ethereum. Are people swapping into the alts, or are they swapping out of the alts? Because if Ethereum goes up 10%, the altcoins go up 10%, we don't really know what's going on. But when we look at the ratio of Ethereum to the altcoins, we actually get the net swapping activity. And this then gives us an idea whether or not we have altcoin season. This is Ethereum's market cap relative to the others market cap. Now others means all the altcoins that are not in the top 10. And this tends to trade in a somewhat stable range. From the bottom to somewhere around the peak, we've got an outperformance of 140%, and the other way around, it's an underperformance of 58%. And Ethereum outperformed the altcoins massively. That's happening since April of this year. And the big question is what's going to happen once we reach the Ethereum market cap being twice as large as the altcoin market cap again. Are we going to see a breakout and Ethereum is going to outperform everything else? Or are we going to see in rotation again? Because that's historically what happened, right? Bitcoin first rallied, right? Everybody bought into Bitcoin during the bear market. There's the dollar cost averagers that believe in Bitcoin long term. They think Bitcoin is the hardest of the monies. Once Bitcoin is very high, and it might not have that much more short-term upside potential, people rotate into Ethereum. That seems to be currently happening, at least for Wall Street. And then after we've seen that, historically, we saw the rotation happening over to the smaller altcoins. It's uncertain if we see that happening, if the altcoins will outperform again. I tend to believe it's not that likely, because will Wall Street really buy Dogecoin and Bonk and Pudgy Penguins, etc.? The altcoin rotation was very straightforward when most of capital trades directly on centralized exchanges, and the altcoin is just one click of a button away. But now the capital flows into Bitcoin and Ethereum through an ETF, and we're unlikely going to see ETFs for all those smaller altcoins. And then even if we do, the question is, if people really put Dogecoin into their retirement accounts. Now, what does this mean in the medium term? I do believe that Ethereum is very likely going to outperform the altcoins, again because of Wall Street money. Bitcoin and ETH in combination is probably going to do better than all the rest of crypto. That does not mean though that the smaller altcoins can't appreciate in value, right? They still might go up simply because of the coupling in the liquidity pools. But at what point in time does it make sense to take profit? Now, this is the Bitcoin treasury companies plus the ETFs. And they tend to just buy and buy and buy, which pushes up the Bitcoin price. There's rarely a period where all those entities are net sellers. They tend to just buy and support the price. But still, until today, they only own 2.5 million of Bitcoin. It's not the majority yet. And so there's a counterweight, right? There's the long-term holder supply change. Now what we see here in green, that's the ETF change. They tend to just buy most of the time. The long-term holders have more impact on supply and demand, at least in the short term. And they also tend to time the market somewhat, right? They sell when Bitcoin is high, they buy when Bitcoin is low, they sell again when Bitcoin is high. And now as Bitcoin is close to all-time highs again, they sold. I'm personally still waiting with selling anything, and that's based on this metric here. It's a stablecoin dominance. So we looked at Bitcoin dominance, we looked at Ethereum dominance. The stablecoin dominance measures how much of all of crypto in terms of market cap is currently in stablecoins. When that's very high, there's a lot of dry powder on the side, right? There's a lot of capital ready to get deployed. When this is very low though, it means that people are already highly deployed, that there's not that much more capital available in the short term. And here is what I'm waiting for. I'm waiting for the stablecoin dominance to get close to 5% again. At that point, the market is extremely risk on. At that point, very likely, we are also going to see a peak in the long-term holder selling. And that's then when I exit, at least for the medium term, to avoid a 20 or 30% correction. The long term is of course clear. Crypto is going up because of Wall Street. Ethereum is benefiting from this currently the most. But the long-term holders might sell more and the sentiment might turn around once the stablecoin dominance is close to 5%. Now it's interesting how those crypto cycles develop over time. As the price is going higher and higher, Bitcoin reaches new all-time highs, new people enter the space because the media is covering Bitcoin. People are wondering, should I also invest in the asset? The problem is most people don't just stick with Bitcoin. Most people want to figure out what's the next Bitcoin. Bitcoin is already high. Is there maybe another cryptocurrency that can do the 10x or the 100x returns? And that's then where crypto YouTube becomes a problem, right? Because many YouTubers pretend they know what the next 100 or 1000x altcoin is. Unfortunately, again, if you're trying to buy those altcoins, you're getting burned. Most people that enter the crypto space with those small altcoins just lose the majority of their funds. They have to make the losses first, then afterwards come to conclusions to potentially approach the market slightly differently. Because maybe that's you. In the last year, Bitcoin appreciated by 78%. But have a look at what those smaller altcoins did. How many of them did more than that? There is UPC, there is Cult, there's Dragon and Hosky, but the vast majority of these smaller altcoins lost massively. Now this is true for the altcoins from the market rank 900 to 1000. It's also true for the altcoins between 800 and 900. It's the same everywhere. Outperforming the already high return of Bitcoin is extremely hard. And I don't think the right approach is to find the one or two altcoins that might do so temporarily. There's another approach, and I'm using that approach for almost 4 years now. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line in terms of return. But I got the return in black. So I outperformed just dollar cost averaging into Bitcoin massively. And it was not by trying to find the next Hosky or the next Dragon. Because here's how this channel is different. Most other channels, they take money from crypto projects or they buy a small crypto project and then use the YouTube audience just to shill the token, right? To just push up the token, generate some attention, then create some purchase orders with that and then dump on the audience. This is what most of crypto YouTube is doing. I never took any money from any crypto project, and I never buy a cryptocurrency before talking about this here on this channel. I don't pump and dump on this audience. I'm also trying to be different by being more transparent, as in I share my performance. So the long-term performance versus Bitcoin we've just seen, but I've also now started trading with relative valuation bets using perpetual futures. Now this might have been a mouthful, but the idea is we want to bet on most altcoins doing worse than Bitcoin, Ethereum and Solana over time, because most altcoins go down over time. And here is when I started with perpetual futures trading. So this is a chart that's roughly 2.5 months only in duration. But during that time, I turned roughly 40K into roughly 60K, a 50% increase, again, in just 2.5 months. And I'm even going one step further. I don't just share my performance, I also want now the community to participate in that performance. I've launched a capital pool on a decentralized finance protocol called Hyperliquid, where a few select people get access to copy trading. So simply just provide some capital and get the same kind of performance. This started 2.5 weeks ago. It's so far up 4.7%. And I'm trying to push up the APR even further than that. The target is to maybe reach 50 to 60% APY. And here's how I'm doing this. I'm not trying to find the next altcoin. I'm not promoting small meme coins where I then dump on the audience. I'm doing the exact opposite. Because here's the reality of the altcoin market. Most altcoins work in a way of an expanding supply. So the project starts with just a small market cap and a small allocation of tokens that are floating. And then over time, the early investors, so the venture capitalists and the team and the other influencers that got paid in the token, they might get those tokens unlocked over time. So they don't get access to the tokens directly. They can only sell after a while. And they sell via that expanding token unlock. So what you see here is an example. This is the circulating BAL tokens over time. So this is Balancer. Balancer started out with roughly 19 million tokens and then expanded all the way up to 69 million tokens. The additional supply went to the founders, to advisors, to investors, and also to the usage of the platform. And so, surprise, surprise, Balancer underperformed Bitcoin very, very constantly. And this is just one small example. This website here, right, Tokenomics.ai, tracks how many tokens get unlocked over time. And on average, we have hundreds of millions of dollars that get unlocked. So if there is not as much inflow every single week in crypto, all those altcoins will do worse than BTC. And so the trick is really to turn this around. So instead of buying the next Balancer, instead of trying to find the next 10 or 100x altcoin, we are flipping the situation around. When the insiders are dumping, we make money. So here's what we are doing. We are betting on falling prices of Balancer and we go long in Ethereum. So suddenly we've got massive, massive outperformance. We can go long in Ethereum, we can go long in Bitcoin. It's the same thing. Bitcoin, Ethereum and Solana are the only cryptocurrencies worth holding over the long term, where we don't have to rotate too much. And since beginning of the year, this particular trade already made more than 100%. Now, isn't it better to get into a position like this instead of finding the outlier in a sea that's all red? It seems more straightforward, right? It seems more intuitive. Let's just buy an altcoin and hope we pick the right one. It's an easy strategy to explain, but just because it's easy doesn't mean it's profitable. People lose with this strategy, especially beginners that don't know what they're doing, that just believe all of those random crypto YouTubers that say they know the next 100 and 1000x return coin. So a chart like this is the reason why I've got this long-term outperformance versus Bitcoin. Bitcoin already has very nice long-term returns. I think it's around 30% per annum, given the inflows that we currently see. If we want to outperform this, we can just bet on the relative valuation. The garbage will stay garbage. The garbage will not suddenly turn around and become better than Bitcoin. And so have a look at the individual trades of our community, right? This is a few wins that are shared by the members. There are potentially even hundreds of percent in single trades. And what matters, of course, is risk management as well. Now, the vast majority of people in crypto lose, and that's in the nature of things, right? If we double our money, somebody else has to lose everything if the market as a whole isn't growing. Thus, if we want to get outperformance, we have to take it from somewhere. Now, my target with this community is to make the majority of us here winners within crypto. So the rest is okay to lose, but we want to be winners, and we do this by having an edge, by doing strategies that most people don't follow. And so here's my offer. I want to make everybody become a winner once they join this community, the premium community of this channel. And here's how I do this. You just have to watch 2 videos. This one over here, using perpetual futures on Hyperliquid to bet on relative valuations. And this one over here, risk management with relative valuation bets. It's very, very important you watch both of those videos. It's 1 hour in total, a bit more than that. And once you've watched that, I will share this trade with you. It's not Balancer, it's something else, but it continues to outperform extremely constantly as well. And I'm that confident in that trade that in case you do not make money with this trade in the first month, so if you enter on day 1, you exit on day 30 or 31, and you don't make money with the trade, then I will refund the entire premium membership fee for you. Yes, I do take a little bit of risk with that offer, right? There are some phases where this chart is not going up in the span of a month. But in general, the odds are very much in our favor that this will continue to print money. Buying this chart over here, again, which is caused by token inflation, is much, much better than trying to find the next Hosky based on a YouTuber that doesn't really know what they're talking about. And so here's that membership fee. It's $125 per month. Again, it gets refunded in case you don't make money with that first trade. Simply join, watch those 2 videos, execute on the trade, make your first money back, and then hopefully learn more along the way. Because that's the long-term plan, right? We want to skill up as much as possible, help each other in the community as well, share potential trading ideas, and then become the small group of winners in a vast sea of losers in this player versus player crypto game. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.